If you look closely at the average American's finances, you'll find a heavy burden. Over $6,000 in credit card balances alone. Add in a student loan, a car payment, and maybe another credit card, and suddenly you are trying to keep a half dozen plates spinning at once, every single month. After you cover your rent, groceries, and basic living expenses, you might only have a few hundred extra dollars to actually put toward those balances. So when you have multiple accounts begging for your attention, where exactly should that extra cash go first? A computer would look at the numbers, calculate the absolute cheapest path, and execute it flawlessly. But we aren't machines. We get tired, we get frustrated, and we lose motivation. Your success depends on your psychology as much as your income. Escaping debt requires a strategy that prevents your brain from giving up halfway through. Let's start with the mathematically perfect approach. It's called the Debt Avalanche. Every loan comes with an annual percentage rate, or APR. You can think of this as a recurring penalty fee your bank charges you for holding on to their money. This diagram shows exactly how the avalanche works. You rank your accounts strictly by that interest rate. You pay the minimums on everything and pour every extra dollar into the account with the highest percentage, completely ignoring the total amount you owe. There is a catch. If your highest rate debt happens to be a massive $20,000 balance, you will be paying it down for months or years without crossing a single item off your list. That lack of early progress is exactly why financial educators like Dave Ramsey champion a completely different approach, the debt snowball. Here, we flip the rules. You sort your accounts by the total dollar balance, putting the smallest debt at the top. You attack that tiny balance first, and you completely ignore the interest rates. By knocking out a small balance quickly, your brain gets a surge of reward. You sacrifice mathematical perfection to get the momentum you need to keep going. To see how this plays out, let's say you have $500 a month for payments. You have an $800 credit card at 22%, a $3,500 card at 18%, and an $8,000 student loan at 6%. Using the snowball method, target the $800 card first. Once paid, roll that money into the next smallest block. This strategy clears your accounts in 34 months, costing you $2,850 in interest. Now, let's rewind and run the exact same numbers through the avalanche method. It immediately targets the 22% card to stop the worst of the penalty fees from piling up. Attacking the highest fees first, you reach zero balances in 32 months, paying $2,410 in interest. The avalanche finishes 2 months earlier and keeps an extra $440 in your pocket. The mathematical logic clearly favors the avalanche. However, staring down a massive balance for nearly 3 years without crossing a single item off your list can feel exhausting. And if you get tired and stop paying, that saved money disappears. There is a third option that occasionally bypasses both of these paths entirely. It's called debt consolidation. This graph shows consolidation in action. You take multiple high-rate balances and move them into a single personal loan or a promotional credit card that temporarily charges 0%. It simplifies your life down to one flat, predictable monthly payment. But you have to be careful. If you don't fix the spending habits that got you here in the first place, you now have empty credit cards just waiting to be maxed out all over again. So, assuming you're tackling the balances exactly as they are right now, you have to choose between satisfying the math or satisfying your mind. If you are deeply disciplined, motivated by spreadsheets, and want to pay the absolute minimum in fees, the avalanche is your perfect match. On the other hand, if you've tried to budget before and gave up, or you know you need to see quick progress to stay focused, the snowball method will give you those early victories. Winning at personal finance comes down to sustainability. The most mathematically efficient spreadsheet matters very little if the person using it burns out and quits. Take a few minutes today to list out everything you owe. Pick your method, set up automatic payments, and if you need help finding that extra cash, click the link on screen to watch our step-by-step budgeting guide.